In this video, we're going to talk about the premium tax credit calculator for health insurance. And this calculator can save you thousands in tax credits for your health insurance. So it's really important that if you're filing your 2020 taxes and you have a marketplace plan, you're thinking about going on a marketplace plan, you already have a marketplace plan, watch the video because this can save you thousands. It's really important that you go through the calculator to educate yourself so you understand exactly how the premium tax credit works and to make sure that you could save thousands. So we're going to go through an example. I'm going to go through the calculator. I'm going to go through a tax return to show you how it actually works and how a very small adjustment and a little bit of knowledge could save you thousands on that premium tax credit. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. So that premium tax credit, sometimes you get it in advance, so that's why it's called the advanced premium tax credit, and it helps pay for those marketplace plans for the premium. So you probably are paying a reduced amount if you're already taking advantage of that premium tax credit in advance. Now, at the end of the year, you basically have to settle up with the IRS or on your tax return with that premium tax credit. So even if you qualified in the beginning of the year, if you ended up making more than what you projected, it's possible that you could either get a reduced amount of that premium tax credit or lose it altogether. So it's really important not only if you qualify, but that you re-verify, because I'm going to show you a couple of things that you can actually do to make sure that you're qualifying for the most on the premium tax credit. So I'm going to go ahead and pull it up on the screen, and we're going to go through this very simple calculator. In fact, I just found this calculator the other day. It's really easy to use. Let's walk through it. And then again, I'm going to go over a tax return to show you exactly why it's so important that you educate yourself on this and understand exactly where you fall with the premium tax credit. So let me go ahead and pull it up on the screen. So here we go. So this is from the IRS's website. It's actually a subdomain. It's taxpayeradvocate.irs.gov. I'll leave a link in the description at the bottom to this calculator, but this is going to give us an estimate and kind of show us where exactly we'll fall with the premium tax credit. And there's another chart that I'll also put in the link in the description at the bottom to walk you through it. So let's go through an example. So I'm going to choose the year 2020. So it's as if we're filing our taxes right now during tax season. And we have our 1095-A, which shows us how much we got from our advanced premium tax credit and that silver plan, which is all what it's based upon. So we're going to put in the 2020 tax year, and I'm going to click on next. And here is where we're going to put our monthly household income. Now I'm going to put in a number that's very close to the maximum amount that you can qualify for and still get the premium tax credit. I'm going to show you those adjustments for a family of 6. I'm a family of 6. That's what the example I'm going to use, but I'm going to put these numbers very close to that income threshold. So for the estimated monthly household income, this, and you already know this for 2020, just go back to your AGI divided by 12, and then you can put it in here to see what you would qualify for. You probably already know, but then we can look at the adjustment. You'll see what I mean in just a second. So in here, I'm going to go ahead and put 11,000, and I'm going to put 11,003 or 400. 11,400. So 11,400 right now times 12 is going to come out to $136,800. This is going to be for married filing jointly, household income, $136,800. And I'm going to put in a family of 6. Of course, put in the family size for you. And you want to make sure that you're putting the correct ages. So I'm going to go ahead and put, I'm not 22 years old. So I'm going to go ahead, I'm 38. So I'm going to put in 38. Doesn't matter. 37, same thing. Put that in there. We'll put my spouse. We'll just put 35, and we'll leave the rest as 0 to 14. My other 4 kids, or my 4 kids, are under the age of 14. So I'll keep them in there. Make sure that these boxes are checked. It's very easy to kind of hit one of them and it will mess up the calculator. It will assume that you have that many people in the marketplace plan or that are eligible. Really important that you do that. Over here, we're going to put the filing status. I'm going to put married filing jointly. My state is Florida. My county is Hillsborough. So let's put that in there. And this will get it as accurate as possible. The continental US is all going to be the same. So I don't even know why they're kind of asking that, but that's what they're asking. So Florida, Hillsborough, they assumed what the monthly premium for the benchmark plan is at $16.28. Of course, you can put in what's on your 1095A if you have it. If not, then just leave the estimates in there. And then 2000, I'm just going to estimate what health insurance premiums would actually cost. And that's what I would call like the MSRP, not with the premium tax credit. So back out that premium tax credit. And it says it right there. Total cost before advanced credit payments or other subsidies. So make sure you're putting that full amount. Don't subtract the advanced premium tax credit. And then the amount that you're taking, let's just say we're going to put 0. It really doesn't matter for this because it's going to tell us how much we would qualify for. And that's really what I'm trying to get at in this walkthrough. So you can see at that amount, we qualify for $6,156. This page right here is step 3 for the changes to your coverage. If you don't have any changes, just leave it all blank and then just click next. Now, here's where you can make the adjustments and really start to understand it. So right now, it's saying that we're at 395%. So if you don't know how it works, premium tax credit goes from 100% of the poverty line all the way up to 400%. What's the poverty line? I'm going to put this link in the description at the bottom. Here we go. It's for 2019. You have to use the previous tax year for whatever tax year you're looking at. So they're setting it up because they come out with these numbers for the following year, not in the current year. So we want to look at 2019 numbers. So for a family of 6, that is $34,590, but that would be 100%. So in order to figure out what 400% would be, and again, any number between 1 and 400% will qualify for the premium tax credit. So if you are a family of 6, that's actually below that number, then you wouldn't qualify. So you need to make sure that your income is at least at $34,590 for a family of 6. If you're single, it's $12,490. If you're married, it's $16,910. Or if you have a child, single child, 3, household of 3, 4, it goes all the way up to 8. If it's over 8, you just see that line right down there. It just says add $4,420 for each additional person. That's how you can figure it out. So let's go back to the family of 6 for the example. $34,590. So I'm going to put it onto my calculator. $34,590 times 4. That would be 400%. That's $138,360. So let's go ahead and divide that, just for this calculator, divide that by 12. That's going to be $11,530. So we're going to go back to our calculator, $11,530. So I think it will adjust right at this amount. So $6,156. So let's see if it works. $11,530. We might have to go a little bit higher, but let's see. Click down here and it dropped. Did it drop just now? Did it drop a little bit? Let's bring it up over 400%. You can see we're at 400% right now at $138,360. So let's go ahead and bring this up to 11,000. Let's call it 600. 11,600. Let's see what happens. 0. See that? A little bit of an adjustment. So let's go back to that. What was that? 11,530. Now it's going to round a little bit. So if it's not going to 401%, that's what you need to do. Go from 400 to 401%. It's that small of a threshold. And it really matters how it's rounding here. So if it's 11,530, let's go 11,535, 535, just a little bit over. And let's see if that adjusts it out. It keeps it the same because it's still registering as 400%. So let's keep on going up. And we can do 11,540 and see if that knocks it out. And it started to bring it down a little bit more. We're still at 400% by these numbers. So it's really rounding here. It's not giving that 0.00 that it's showing. So if we go 11,590, let's say, and then you can see it starts to dip down. And if we go back to that summary page, we're at 402%. So I guess I put in a little bit too much in there. $139,080 to get to 402%. So once it gets over 400%, you don't qualify for any of that premium tax credit. So this, a lot of times what we're looking at is when you're going to file your taxes, you're just taking that 1095A and plugging it into your tax software or going to your tax professional and giving them the 1095A, giving them your W-2 and saying, here, calculate my taxes. And they come back and say, okay, this is what your taxes are. Now, if you had taken this premium tax credit, that means you have to give it back. So that means you're going to have to actually owe the IRS that difference. Otherwise, if you didn't take it up front, then you actually get, in this example, if we can get it below that threshold, we'd get back roughly $6,000. So that's a huge difference by just a few dollars. Now, if we flip over to the tax software, now this is a fictitious return, and I've already set it up. So I put it in at $138,400. So again, we have our times 12. So that's $138,360. So we need to get it below that amount. So let me go back to our federal section for our income. And I'm going to adjust this just really quickly to show you the number. And then I'll show you what we can do to actually proactively get it lower. $138,400. So 138. Let's go to 360. I don't know if that'll work. Let's see if it'll actually calculate it out. And let's click continue. And it's calculating. And there we go. So it went from, I missed that number, but it was basically owing the IRS about $500. Now we're getting a $5,441 back from the IRS just by dropping it down because it knows that we qualify for that premium tax credit. Now in this example, I put it that we weren't taking the premium tax credit or the advance of the premium tax credit. That's why we're getting it back in a refund. Now, had we received that premium tax credit up front and used it or applied it towards our premiums, means throughout the year, we were paying a much lower amount than the MSRP of that marketplace plan. Therefore, that means in this example, if that were the case, that means we would actually owe nothing or had to pay them about $6,000, the IRS about $6,000. So let's go back and put that number back up to the higher amount. So we'll put it at $38,400 for a second. And if you're watching this and seeing the other numbers change, that's automatically assuming our withholdings. So you're likely to have already had your withholdings, so you're going to manually put those numbers in there. It's just adjusting it for me because I told it to, or we told the system that, hey, just put in whatever the estimates are based on this income. So that's why you're seeing those adjustments. So if that's confusing to you, just look past that. It's an adjustment. We would take this directly from your W-2. So you're going to put that in there, $138,400, and let's click continue. And the federal, again, back to owing the IRS $572. And here's what we can do. We could save into an IRA. So let's go ahead and save into that IRA. I already put the IRA in here. I already set it up. What's really important, if you have a workplace plan, you might not qualify for the traditional IRA. So look a little bit closer. In this example, we wouldn't qualify if we had a 401k at work. So it's really important that you pay attention to that. Also, your spouse also has to, whether or not they have a retirement plan at work will affect whether or not you could put money into a traditional IRA. Now, for small business owners, you have opportunities. If you don't have a workplace plan, you have opportunities. Look a little bit closer at your situation. Again, this is only one way to reduce your adjusted gross income in order to qualify for more of this advanced premium tax credit. So let's say the $138,400, let's say we put, let's put $100 in here. Let's see if that adjusts it. $100 into our traditional IRA. And we're going to click continue for a second. I don't know if it'll adjust it or not. There we go. $100 into our traditional IRA. And we went from owing the IRS to getting back $5,460 on that advanced premium tax credit. So don't just take the 1095A, go do your taxes. Look a little bit closer to see what those thresholds are. And this goes for all credits and deductions. you need to look at what those income thresholds are, because if you can get just a little bit lower, that could have a huge impact. And this is a use it or lose it. It's not like you're putting money into a 401k and deferring taxes and trying to figure out whether or not it would make more sense for the traditional versus the Roth IRAs. This is a use it or lose it. So either you qualify in the year that you're filing your taxes or you don't. So it's really important that you're paying attention to that. Now, as far as this goes, is it being a cliff, meaning it's that close that you can literally save or earn less, $100 less, and it can have that much of an impact? Clearly, that's a flaw in the system, but that's the way it's built. So you really want to pay attention. If you have a marketplace plan, pay attention to those premium tax credits. Even though you qualified in advance, you want to make sure that you can keep that money. Really important, and that is a huge impact. And we just showed literally $100. I mean, finding $100 in order to get back or have that taxable situation change by almost $6,000 or $6,000 is a lot. So let me know if you have questions or comments in the comments down below. And of course, if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.